So we're live. Welcome to Friday Forex Live. How's been the week? How's been your week? How's been your week? How's been your week? This is Trade with Pisam. You're welcome to tonight's live class. All right. While waiting for others to join in, let's wait for others to join in. I mean, the week was a bit up and down for me. Was quite interesting. Very interesting week, I must say. Very interesting week. Started a challenge for July on a $5,000 GFT account. Started a challenge for July on a $5,000 GFT account. What amazing thing is we're already on a losing streak. How interesting is that? I mean, but for those who are actually, familiar with this space, that's how it comes. You enjoy the wins, you enjoy the losses. You have to take both. All right. So when we get the wins, we take both. When we get the losses, you also take the losses. So it's a game of wins and losses. So we can't, you know, yeah, you just have to accept accept it as it comes. All right. So yeah, so if you're not keeping tabs on that, you want to check out that on my TikTok, Trade with Pisam, and on Instagram as well. Hopefully, I'm hoping to document it on YouTube as well. Let's see how that goes. Let's see how that goes. All right. All right. So for this evening, it's going to be a very quick one. So I just want to like bring us up to speed on how to get back on our charts and how to analyze the charts for trades. Right. I know it's been a minute since the last live class that we had. And for those who are just watching this live or joining this live for the first time, this is Trade with Pisam, and this is where we discuss everything forex and profitability. We document everything, the wins and the losses, and show you the back end how it really is, not just the flashy cars, not just the blues, but also the reds, right? So, but all in all, showing you towards profitability. So yeah. All right, so in this particular class or in this particular session tonight, I'm just going to be showing you, particularly my audience, or I'm trying to address beginners, right? So that we have a good understanding of what the market is saying. And just in case you're already familiar with the space, already familiar with forex trading, but yet to be profitable, then you have one or two things to learn from here that would help you stay profitable. I like we always say, it's a game of discipline. It's a game of following your system, right? It's not all about the wins, it's not all about the losses. As long as you can follow your system and you can be disciplined, take the wins, take the losses, then you end up in profitability. All right. And you can't judge your how good you are or how profitable you are by just a few trades, by just one, two, three trades. No. You want to zoom out and evaluate over the month, 30 trades, 100 trades, then you can do your data, analyze your data to know how profitable you are. Just taking a loss here and there is not enough to justify if you are profitable or not. All right. So quickly tonight, we're going to be analyzing GU to just see how where we can enter trades. I know that there are a lot of strategies already on the internet, and there are a lot of there are a lot of strategies on the internet. Trust me, a lot of people. And if you're on the live session, you want to drop a comment, so I know that you are with me here. Just drop a comment. Just drop a comment, so I know that you are following the live session. All right, all right, all right, all right, all right. Okay, so like I said, as long as you can follow your system, everybody can be a forex trader. All right, it's not far fetched. I mean, I've been trading for over 2 3 years now, and I can tell you for a fact that everybody can be a forex trader as long as you can follow your discipline and follow your system. If you're undisciplined, then you're going to get burnt. You're going to suffer for it. All right. So if you're just joining, just drop a comment and register your presence on the chat. So today we're going to be looking at how to analyze the market. Of course, we know that the market only opens Monday to Friday. All right. So, and today is the end of the trading week. For us, trading was a bit rough for this week, but I mean, it only gets better. Trust me, it only gets better. Only gets better. All right. So now looking at GBP USD, looking at GBP USD, this is what you see when you come on your trading view. All right. So if you log into your trading view, and I think I have a video on that already. You want to check one of my videos on the page itself. I have a video on that already. But so you need to go watch the video so you can get yourself up to date on how to even get here in the first place. But just in case you're already familiar with that, and you can check any tutorial online to get to explain how you get to this particular interface and how you can check. Of course, you know that we only trade currencies against the other. So we are trading the GBP pound, the Great Britain pound against the US dollar, right? So that's what this pair is about. So this movement up and down is actually the variation of both currencies. It's the variation of both currencies. So it's as simple as that. We don't do too much. It's not rocket science, right? It's just that a particular currency against the economy of a particular country against the economy of another country, right? That's why you always see that when you're trading two pairs. I mean, you're trading correlation of two pairs, or correlation of a pair rather, a currency against the other, basically, right? So BTC USD is you're trading Bitcoin against USD or USD against Bitcoin. Same with GBP USD, same with Euro USD, same with um XAU USD. XAU USD is gold, right? So yeah, so let's get right on it. So if I come on the chart here and I'm just seeing a lot of things, what do I really need to? What am I buying or selling? And, of course, you know that there are two different things you can do. You can either buy or sell, right? That's how you profit from the market. So you're either buying to the upside or you're selling to the downside. One of the two. And if you're able to predict correctly, I'll call it prediction because nobody exactly knows where the market is going. Whoever tells you, guarantee this is where the market is going, is lying. Definitely lying to you. All right. Whoever tells you that is lying. So nobody knows. Even the hedge fund, the big guys, the big banks, nobody knows. Because if everybody knows, then I'll be a billionaire by now, right? So that's why the correlation and the um prediction, right, based on analysis. Now it's not guesswork. There are a couple of things that you need to pay attention to that can give you an informed decision on what to take, whether it's a buy or a sell, right? So you're not just jumping and just trading anything. So now, if you come on the charts, this is what we see, and these are my period separators. We call this blue lines period separator, separating the last day from the previous day from the next. So this is Friday because Friday has not closed. I think it closed around 10 p.m. So that's why you've not seen another line on it. So let's name it let's say this Friday. All right. And this will be what? Friday, Thursday, Wednesday, Tuesday, Monday. This is Monday. This is Monday. So I'm going to be giving you a very simple a very simple strategy that you can use. Of course, the strategy does not work 100% of the time. 100% of the time, there's no strategy that works 100% of the time. If you're on the chat, drop a comment so I know you're here. Register your presence, and let's go. All right, like I said, nobody knows where the market is going 100%, and no strategy works 100%. The idea is that you want to have a strategy that will give you more chances of wins than losses. So you want to have a 60%, 50%, 70% chance, 80% chance of one thing happening over the other. All right, of one thing happening over the other. So now looking at this JBP USD, for instance, I want to predict the market. Where is the market going? Now, looking at it from Friday, we realized that the market was actually going up, right? I mean, look at this. Looking at it from Friday, we can see that the market was actually going up, trending upwards. I mean, if say for instance this was Friday, if I had known that this was what the market was going to do from on Friday, I would have just been buying from Monday. So I would have just maybe set a buy right here and then put my stop loss around here. I might take profit around here, right? And then I would have been so this would have been a 1 to 10 risk to reward. Or 1 to, yeah, let me put it very well. This will have been a 1 to 10, 1 to 11 risk to reward. Isn't that beautiful? But that's the idea. Nobody knows what the market is going to do. Because I could have thought it was buying up and then market opens and it was selling down or we continue selling down. But there are a couple of things that you need to pay attention to give you an informed idea of what the market wants to do. All right. So as a beginner, one of the things you need to pay attention to is how can I get the direction of the market? How can I get the direction of the market? Now, one of the things you need to pay attention to is you want to know the data from where the market is coming from and where the market is going. Right. So this is Monday, right? So let's imagine this was Monday, this previous Monday. So from this Monday, I want to know, okay, what was the market doing before Monday? Right, market was most likely selling, right? So we want to have a series of zigzag movements, right, to in one direction. So if you want to look at this series of zigzag movements, we could see that the zigzag movement is actually going down. All right, was actually going down. And if you have a zigzag movement like this is on a 1 hour time frame, by the way. So if you have a zigzag movement like this, we call these things lower highs and lower lows, right? Why? Because it is going down. So it can only go lower, lower highs and lower lows. If it's going higher, we call it higher highs and higher lows. All right. Are we following? Are we following? Are we following? We call it higher highs and higher lows. And for lower, we call it lower highs and lower lows. Now let's name these ones. So for this is a high, right? This is the high. This is the H. Now then we have a lower high because this high is lower than this high, right? And then we have a lower low because this low is lower than this low. And how do we represent lows? We want to represent where market has a significant turning point, right? So this is a significant turning point here. I'm coming. Let me put out my circle. All right. So this is a significant turning point here. Another significant turning point here. All right. So that's how we identify the lower highs and lower lows. Are we following? If you're following, drop something in the chat. All right. So significant low, significant low, significant high, significant low. Right. We have another here, another significant low, and another significant high. And we have another significant low. All right. And another significant high. So you can see from here, we have lower highs, lower lows. And if I want to continue labeling, this is another low, which is lower than this low right here, right? This is another lower high, which is lower than this high right here. This is a high, this is another high, but this high is lower than this high, all right? I believe you're following. So that is basically just to tell us that previously, the market has been trending downwards, right? Up until this Monday. So if you're looking at what happened this Monday, we realize that market started changing direction. So after this high, we had high to the upside, a significant turning point here, then a higher high, then a higher low because this low is higher than this low, then a higher low, then another higher high, then another higher low, then another higher high, higher low, higher high. So you can see that now market has changed direction. So now we are looking at an uptrend right here. Initially, market was trending downwards. Now market is trending upwards. I believe you're following. So it's really straight to the point. If you actually get where the market is going, all right, and the best option you can, or the best position you can put yourself is to position yourself exactly where the market is going. If the market is going downwards, you want to position downwards. If the market is going upwards, you have no business selling or buying, or for depending on your strategy, right? So you want to pay attention to that. You want to pay attention to that. So now moving forward, now that we already know where the direction of the market is going, so as on Monday, we realized that the market was actually buying upwards on a 1 hour chart, right? Market is buying upwards. You can also check the daily charts, the 4 hour charts to see where the market is going, right? But on average, market is actually trending upwards on our 1 hour chart. So now what I need to do as a Monday, and how do you also know that the market is trending upwards? Is that after the market has formed a higher high, we call something a break of structure, right? So meaning that market actually goes in a structure. So say for instance, market is going downwards. The moment market breaks this low, right? This becomes a break of structure, right? This low, this becomes a break of structure, right? And market can also continue, can trend back up again, and once it breaks the low again, this is another break of structure. Are we together now? This is another break of structure. So we need to really exactly pay attention to what makes a break of structure and what creates a change of character. If you are following, you want to drop something in the chat so that I know and register your presence right here. All right, all right, all right, all right, all right, all right. Okay. I believe you're following. I believe you're following. I believe you're following. If you have questions, you can also drop in the chat. It's not going to be a very long class. This is the first Friday. We have like 3 more Fridays in the month of July or 4 more. I don't know. Right. So that's pretty much that. So yeah, as I was saying, You have once the market change direction and breaks the low. Remember that we said this was a lower low, another lower low. So the moment market broke this low, this becomes a break of structure. This line, this act, what happened here becomes a break of structure, right? Another one here, the moment market broke this low, it becomes another break of structure. So you need to understand that market actually moves in structure in zigzag format, right? So you won't just see market go upwards in one direction like this. No, market can't just go in one direction like that. It has to go in zigzag format, right? It comes down, retraces, breaks the previous high, comes down, go up, breaks this one again, then comes down, then go up, then breaks this one again. So that's how market actually trends. Are we following? That's how market actually trends. All right, Mr. Emmanuel, you're welcome. I see you. I see you. Drop something in the chat to register your presence so I know you're here with me. Okay. So now that we understand the market is breaking structure, now that we understand that part, so we can interpret that on our charts right now so that we know what we are doing and we can predict where the market is going. All right. So now Monday to Friday, let's come to Monday. We are going to be picking some trades and see where the trades actually lead for us on Monday, since Monday. So let's say we are trading on Monday now. All right. Let's say we are trading on Monday. Let me see if I can get a replay. All right. So let's say this is Monday. Okay, I don't have a pro plan, so it might not work on here. It might not work on here. All right, so let's just say this is Monday, right? This is our Monday right here. The market opens on Monday and broke a structure to the upside. What is that to tell me? That's to tell me that the market is trading upwards. All right? That's to tell me that the market is trading upwards. It's as simple as that. All right, market is trading upwards on 1 hour. So, of course, I'm supposed to wait for this market to see a significant break of structure. That happened around 1 p.m. on Monday. So market was trading upwards. So what am I supposed to do? I'm supposed to wait for market to, if I buy market here now, if I buy the trade here, or I buy the trade here, will it actually pay me? Yes, it will. Right? If I buy the trade here, or if I buy the trade here, now that we've confirmed that, okay, it's looking like market is actually trading upwards, all right, or GBPUSD wants to go up, what am I supposed to do? I'm supposed to buy, right? Now that we know the direction of the market. Now the next question is, where am I going to buy? That's the next question you need to ask yourself. If you're joining the chat, please drop something in the chat. Drop a 1 in the chat so to register your presence, I know you're here. All right, drop a 1 in the chat. 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 All right. So, as I said, if market breaking structure right here, is to tell us that market is going upwards in the upward direction, right? Beautiful. Now, the question now is, where do I buy this market? Where do I buy this market? Do I buy here? Do I buy here? Do I buy here? That's the big question to ask ourselves. All right. And you need to pay attention for this so you don't miss it, don't miss out. Right. Now, the question is, where do I buy? Very simple. I want to buy. There are different ways where you can buy the market, which informs your strategy. There are different places to buy the market. I can buy the market here, right here. I can buy the market right here. I can buy the market, any other place where the markets will come. But this is where it gets interesting. Now, remember that we are on a 1 hour chart. Remember that we are on a 1 hour chart. One thing I can do right here is to mark out a fib retracement tool, or bring out my fib retracement tool. What is a fib retracement tool? It is to tell us that, say, for instance, this is where the market started and this is where the market got to. I know that the market would actually have to come down, definitely, because market won't just continue pulling up, right? It will have to retrace to a point, maybe here, before it continues pushing upwards, right? Now, the question is, how do I know where the market will come to? Let's use a fib retracement tool. If to get your fib retracement, you want to come to the toolbar here, pick up your fib retracement, the lowest point and the highest point where the market has turned around, or where the market decided to do a U-turn. You want to put it down there. Now, you can see that there are a couple of levels here that you can trade the market. So you can trade the market at a 0.382, or a 0.5, or a 618, or a 786, right? Or even a 1, right? So because we never know where the market will come. So we just need to position. Now, best advice or best practice is that you want to trade below the 50%. All right, that's the best practice. We are using a fib retracement. Anything below the 50%, that is where we are going to be trading this market, right? And that is where you get the best option. Because say for instance, market comes back here, right? We know that what I need to do is just buy, position for a buy, put my stop loss below the last low, which is where the market started from, and then take my take profits at maybe a 0.217, a 0.217, or the next line of the next what's it called? The next yellow line right there. Or probably just do a 1 to 2. All right, 1 to 2 keeps you profitable, or a 1 to 3, or a 1 to 4, depending on your trading strategy. Right. So now that I know that the market is going to trade back in here, all I need to do is just trade at a discount zone. Now, another question is, where do I trade? Is it a 0.5? Is it a what's the next one now? Is it a 0.618? Right? Is it a 786? That's another question to ask ourselves, because you need to be very definite on where you want to enter the market. And I would also want you to practice this. I want you to practice it so that you can get familiar with this. So that by the time we come on the next live class, you are not just observing. You can also implement all of these conversations and all of these things I'm teaching, right? So it's a very simple strategy. Like I said, Forex is not hard. It's just that you need to understand your system and trade your system as it is. All right. So now the question is, where do I trade the market? 0.5. Like I said, we want to trade in the discount zone. Anything below 50%. Right. That's what we call a discount zone. Anything below 50%. Right. Say for instance, if you are buying something in the market and somebody is saying maybe the product costs $50, and somebody is saying you should come and buy it for $70. You won't buy it. Why? Because it's expensive. That is what this part means. This part is expensive because you are buying expensive. What does that mean? If you buy here, market can still it still has a lot of room to come into. Market can decide to go from here anyway, but it can still decide to come down and still decide to come down. It's still correct, right? And still decide to come down until it gets to the one, and then maybe it start changing. See what happens. You're already in a very deep drawdown. Imagine this was a red. You're already in a very deep drawdown here. But imagine I bought here. This is cheaper because all the market needs to do, the distance for the market to change direction is already little. But if I bought somewhere here, I still have a long way to go before the market changes direction. Are we following? Before the market changes direction. So basically, you want to sell at a discount zone, which is what the 50%. So let's apply this on our charts. So now this is where the market started on a Monday. Pick out our fib retracement. Now the lowest point of the market and the highest point, all right, where the market did a U-turn. So this is the lowest point, broke structure. This is the highest point. Now the market did a U-turn, right? And see what we have here. We have, can you see what I'm talking about? The markets changed direction on a 618 level. Isn't that interesting? On a 618 level. That's where the market changed direction. On a 618 level. It looked like it was going to change direction on a 512, right? But you also changed direction. You finally changed direction on a 618. So that's how to like get your direction. So what I needed to do, say for instance, I was trading 618. All I need to do is just put my stop loss, my entry here, buy at this level, my stop loss at say a lower level here, right? I might take profit where, say I do a 1 to 2. So I do a 1 to 2. This is my 1 to 2. Isn't that interesting? So on um that means on my charts here, on a Monday, market broke structure on a Monday. Now remember, this is Monday, then this is Tuesday. All right, this is Tuesday. Leave it. Drop a 1 in the charts if you're following. Drop a 1 in the charts if you're following. This is Tuesday, right? So market came back to my entry, to my discount zone on Tuesday. Remember, this is our discount zone. Anything below the 50. All right, anything below 50 is our discount zone. Anything below 50 is our discount zone, right? So what I needed to do was wait for market to come to either my 512 or my 0.50 rather, or my 618. So say for instance, I chose my 5.0 or 0.5. I just need to put my stop loss should always be below the previous low. All right, below the low of the low that caused that movement. All right. So of course, on a 1 hour chart, this is a very high stop loss. But if you are a swing trader, this is a very good trade for you, because all you need to do is to just position for a 1 to 2 or even a 1 to 3. All right. So if I position for a 1 to 3 as a swing trader, guess what happens? Market would have hit my take profit on Thursday. How beautiful is that? My market will have reached my take profit on a Thursday, right? Because market would have taken me here on Thursday, and that would have been a 1 to 3. So meaning if I was risking say $20 here, I'll be making $60 in profit. All right, I'll be making $60 in profit. The only downside to this is that you only have taken one trade per day, which is really not a downside, because the goal of trading is that you are profitable, not that you are trading every day, right? So if you're a swing trader, you want to. This is a very good setup, right? You enter at your Fibonacci retracement here. You enter on a maybe a 5.0. Remember, you won't always discount. Don't trade expensive. Trade discount, not premium, discount. So your 0.5 or your 618 right here, right? Market comes, tap you in, your stop loss below the low, below the the higher low right here. Remember our labeling. We have a higher low here, another higher low here, a higher high here, another higher high right there, right? So this lower high, this higher low here, your stop loss will be right under it. You take profits, you want to do a 1 to 2 or a 1 to 3. And guess what happens? Market comes, tap you in, dish you a 1 to 3, your trade close on Thursday, and you're already in profit. As simple as that, right? And bear in mind, you can also do this thing on a lower time frame. All right, you can also take these trades on a lower time frame. It doesn't have to be on higher time frame alone. So if you're a day trader, so now let me scale down to a 5 minute or a 15 minute market or a 15-minute time frame and see what we have right there. So 15 minute time frame. This is what we have. Now, this market, this trade would have given us a 1 to 3 on a higher time frame, meaning if you're a swing trader, this is a very good trade for you to enter, right? But now let's come down to a 15 minutes time frame. What does a 15-minute time frame really mean, or what's it telling us? Is that we have a closer look at how the market is going in 15-minute candles. So it takes 15 minutes for one candle to close, whereas on a 1 hour time frame, it takes 1 hour for one candle to close. Can you get the difference? So 1 hour is like a summary, compounding of different candles of 15 minutes into one. So in 1 hour candle, you are looking at four 15-minute candles. Are we together now? You're looking at four 15-minute candles. All right. So it's really like really straightforward. Really straightforward. So yeah, pretty much, right? So now let's look at what we have on our 15-minute candle. I might need to clean up my chart so I can see what I can't even see what is happening here. So let me clean up my chart and see what is happening. All right. Um, so just delete all, remove all, and then let's get going. So now remember, this is still Monday, Friday, Thursday, Wednesday, Tuesday, Monday, right? So let me just label it Monday. All right, we'll be done in a minute. This live class won't go more than an hour max, right? So we'll be done soon. But what's most important that you practice? You practice. Like I always say, trading is a game of wins and losses. The goal is that you want to win more times than you are losing. That's what keeps you profitable. All right, like today now, I mean for this week now, I already taken 3 losses back to back. Right? Am I phased? Maybe a little, of course, because I'm emotional as well. I mean, I'm a human being, right? So it can get to me, but in the real sense of it, it is a game of wins and losses. So if I'm not ready to take the losses, then I cannot embrace the wins. That's just how it works. So if anybody is lying to you, telling you that it's just all wins, then it's a lie, and the person is just deceiving you. Even the best of traders still lose. So get ready to lose a bit. But the goal is that you want to win more times than you're losing. So if you're losing $50 and you're winning $150, then you're profitable. That's what profitability is. It's a difference of both worlds. It's a taste of both worlds. So now looking at it on the 15 minutes chart, let's mark out our movement. So from Thursday, we have a break of structure here. It broke this level here. Then it came back, Then we have a tiny bit of break of structure right here. Then it came back. Then we have a good one. Then it came back. Then we have this one. So now let's stop here for a minute. Now let's stop here for a minute. Now the reason why I didn't count all of these other zigzags right here is because of the fact that overall on my 15 minutes, these are the kind of break of structures I'm looking for. Why? Because this is a higher high and this is another higher high because market broke structure right here. This is a higher low. This is another higher low, right? This is another higher low and this is another higher high. Do you get? And this is a higher high because market broke structure. This is also an higher high because market broke another structure here. Are we together? Are we together? So basically, that's how we are trading. So now that we know that this is our higher low, this is our higher high, what I need to do next is bring out my Fibonacci tool, pick the lowest point of the market right there and the highest point of the market right here. Can you see another perfect entry? Another perfect entry. Guess what? Remember what I told you? Never trade the premium, only trade the discount. So from our 0.5 here, this is our discount price. Are we still together? Drop a 1 in the chat if you are following. Drop a 1 in the chat if you're following. Drop a 1 in the chat if you're following. All right, all right, all right, all right, all right. Beautiful. Okay, okay, okay. So I think we can proceed. I think we can proceed. I think we can proceed. All right, so pretty much now that we know that this is our discount zone, right? Now that we know this is our discount zone, and just in case you're a beginner, you are not familiar with all of these terminologies, I have a video for you, right, where you can watch. You can just go to my I'm not sure if I've released that video to the public. Maybe I would need to do that. You can just go to my channel and find one of like the very very first videos, or probably I'll just have to release the video or make the video public so that I explained every single thing you need to know about the beginner part of forex trading, right? All of the terminologies, how to search for them, how to set them up, so that you are familiar with all of these conversations, right? You are familiar with all of these conversations. I see you, Emmanuel. I see you, Emmanuel. All right, so you're familiar with all of this conversation just in case. But if you're not familiar, I mean, if you're already familiar with it, then of course all of these things are not strange. They are not strange. They are not strange. So back to the chart. Back to the chart. So now that we've gotten the discount zone, market, this is a 0.5, this is a 618. So what I would ask you to do is that I would want you to just pick a level. All right. I want you to just pick a level. So it's either you go for a 0.5 or you go for a 618, right? I think market actually retraces at one of those two levels, right? So say for instance we chose a 0.5. So my entry is here. My stop loss, like I said, is always at the previous low, right? So either you are bringing it, this is a low right here, internal structure. This is a low right here. Either you are bringing it on this low, below this low, to cover it. So what you are doing is that you are covering the structure in that part. So this is a low right here, internal structure. This is another low, and this is the big guy, the higher low that we have originally. So back to the chart. So if you have this low protected, all you need to do is just take a 1 to 3 or a 1 to 2 at most, or 1 to 3 at most. So let me do a 1 to 3. A 1 to 3 at most. What we have here is the market what did what? Came here, entered our, we'll buy at this 0.5, for instance, right? Entered our level here and then did what? Started trading up. And what? On Wednesday, Monday, Tuesday, Wednesday. On Wednesday, guess what we have? We have a win. All right, we have a win. Was it on Wednesday, Steph? I think this should be on Thursday because market was close to it on Wednesday. We finally tapped it on Thursday, so we have a win, which is a 1 to 3, meaning that if you are risking a $1,000, if you're risking $1,000 here, guess what you just made? Times 3 of that on your account. And if you are risking just $10, you just made $30. on that account, right? And that is on a Wednesday, Thursday. So that's still one trade per week, right? So that's just the idea. Like I said, you don't need to trade every day if you don't want to. But if you want to get more opportunities every day, you want to scale down to 5 minutes, 3 minutes. There you would also see you can still apply the same strategies and you would see more opportunities because it will be fast. Your market would be hitting your stop, your yeah, either your stop loss or your take profit faster, right? Market will be hitting it faster. Market will be hitting it faster. All right, so that's pretty much it. What I want you to do right now is that I want you to um go. I want you to go to your broker, any of the brokers. You can also check the link in description just in case you need a broker or you want to join my, you want to get a prop firm, for instance, right? You want to check the link in the description. Gold Funded Trader is giving 40% discount right now, and you can get a prop firm for as little as $17. That's about 20,000 something, right? And get that account. They give you access to $5,000 in capital that you can trade. Of course, you need to prove yourself by passing the phase one and two. And once you're able to pass, they give you the real 5,000, and any profits you make on that, you take 80% of that split to into your own personal account. I mean, that's like the biggest leverage you can ever get. Maybe you can't afford $5,000, but with for $17, you can get access to $5,000 and trade and start making large amount of money for yourself. So basically, that's it. And trust me, if you apply this strategy, if you are taking one win per week in just a matter of time, then you'll be in profit. If you're trading 1 week, if you're taking one win per week, you'll be in profit in a matter of time. So yeah, that's pretty much it for today. If you've learned something, drop what you've learned in the chat. Drop what you've learned in the chat. And it's been an amazing time. This is a live Friday live class. And if you have questions, please feel free to drop questions in the comment section. And maybe I will just address the question in the next live class. But you can have questions if you don't practice. So you want to make sure that you're practicing. And just in case you have access to me directly, if you're part of my inner circle student, you of course you have access to me directly, so you want to send me a message, right, or a message. You want to send me a message and I'll do well to answer your questions. Yeah, that's all for today. um yeah, pretty much we'll see you on Friday again next week, but more importantly, subscribe, like this video so more people get to see this kind of content and it's of value to them. All right, see you in the next live class. That will be next week Friday. Peace.